Good evening. My name is Alon Reyes. I'm CEO of Reyes Corp. And tonight we have our first live Q&A that is hosted by Spartan SME Finance. And in studio with us tonight we have Kumaran, the CEO. Tonight we're going to be talking about two very important subjects for entrepreneurs. That is finance and strategy. Anything to do with finance and strategy. Just a bit about myself. I, as I said, am the CEO of Reyes Corp, and we have spent the last 20 years looking after entrepreneurs from a business development services point of view, growing them from an entrepreneurial point of view. In that time period, I started a TV show on Business Day TV called The Big Small Business Show, and 1 or 2 years into that show, I asked Kumaran, a very good friend of mine. We have been friends from an organization called EO, Entrepreneurs Organization. Asked him to come onto the TV show with me. That was one of the big mistakes of my life, but I've spent the last 8 years trying to get rid of him, but I haven't been able to do that. And here I am again tonight with Kumaran on live Q&A, and Spartan is hosting this session, which is really about the entrepreneur. The one thing that Kumaran and I both share is a deep desire to see small businesses grow into big businesses, to become successful, employ people, and build the South African economy. Tonight's show is incredible because, you know, we are live broadcasting through LinkedIn, through Facebook, through YouTube, and various other platforms. And we have registrations tonight from 6 different countries, from all over the world, in fact. And we have hundreds and hundreds of people from all over the world that are interested in the subject of small business in South Africa. I'm not going to talk about Spartan because that is the job of the CEO, Kumaran. And welcome, Kumaran.
Thanks, Alon.
Yeah. Remember, we are not allowed to swear on this show because this is YouTube and LinkedIn, and they'll kick us off. By the way, he normally swears on the TV, but today we can't swear. So, welcome. Tell us a bit about Spartan and your mission and what you do.
Before that, I'm going to do that in a moment. This first series is a question and answer type of thing. So we're expecting and encouraging the audience to engage with us and ask us questions, post it on LinkedIn or YouTube. We've already got the audience that has submitted questions beforehand, so we have a fair amount of questions to go with that.
And you also have a poll going on right now.
On LinkedIn. Right. There's a poll there. It's what is your biggest frustration with funding, in getting funding? And there's 4 options, so that will give us some insight. Those of you that are watching this via LinkedIn, you can participate in the poll. And so this is really, it's not really a talk, it's about the question and answer type of thing, because we can't predict what is in people's minds or what they always need help with. And this is not about the Spartan funding. That I want to make abundantly clear. We're talking about the issue about funding and strategy, but on the funding side, it's intended to be universal, whether it's debt funding or equity funding, across all the funding categories. There may be a small portion that we talk about Spartan. Okay. And what Spartan does, just very quickly, I'll try and keep that to a minute. We fund SMEs that are established SMEs, not lifestyle, not startups, unfortunately. All funders concentrate on a particular market. That's our market. And this is generally SMEs with a 5 million rand and above turnover, generally. And we fund things like working capital for contracts, projects, purchase orders, 1 to 3 months. We also do specialized asset financing for things that are very unique, that don't have value, as well as growth funding.
So you can say something unique that doesn't have value?
Well, something like software, something like fit out, something like an obscure asset like a industrial drone, or a 3D printing plant. Those things don't have an auction value, right? Yeah. So it's stuff like that. And so we do structured financing across the board. So I'll stop there about Spartan and turn it over to
Let's start with our first question. So just once again to reiterate what's happened, we've gone out, we've asked everyone to submit questions, and we're going to start this evening with a few questions that have already been submitted, and then we're going to ask you to please go onto your whatever, if you're on LinkedIn or Facebook or YouTube or whatever you're on right now, please post questions in the comment section, and we will try and address those over the next hour. We've got exactly an hour, so let's get straight to it. And our first question here that's come through is from Armand Fari, and he's asked, as we approach a funder or funding organization, what do funders expect one to have a very, and in bold, very good understanding of when applying for funding?
There's a few things, and I'll stick to the most important because the underlying vary, right? So the first thing is that you know your funding need. That sounds very simplistic. Of course I know my funding need, but you'd be surprised how many people don't know it. And what am I talking about? How much you want, what you want to use the fundings for.
So just stop there. People come to you and ask you for funding and don't know how much they want.
Sometimes they give you a range, sometimes they're quite specific. But often they may not say in detail how this funding is going to be. I need 5 million rand, and they can explain away what 2 million is needed, but not the other, 3. Now this goes to all funders, not just a Spartan issue, right? So one is knowing the details about your funding. What do you want the funding to be used for, and how do you envisage repaying it back? Because you may know, I need it for a project, I need it for a contract, I need it for this specific purpose, which will determine how you can afford the repayments. Because that should be dictating who you approach for funding and on what basis. Because if your project can only afford to pay it back in 6 months, there's no point of applying for funding that can be paid back, needs to be paid back in 3 months. So that's the one category.
Sorry, I'm interrupting you, I always do that. You use the word project, what your project is able to fund back. Does that mean if I come in as a business, I can't come in as a general business?
You can.
You have to fund something?
You can. I mean,
an order or
yeah,
something?
No. People have funding needs that is a whole smorgasbord of stuff. I just use that as an example. But whatever your funding need is, you're going to know, I'm going to put this funding to that use, and this is how I envisage getting the money back to be able to service and pay that. You need to know that first before the funder can determine that, because it shows that you know your stuff. Okay.
So Kumaran, I keep interrupting, but you spent the last 8 years with me, so you know that's going to happen, right? So you speak about the fact that people say this is what I'm going to need, right? But I see that as well. People provide me with business plans. It's got that J curve. Need lots of money. Going to make lots of money in year 3. So how do you know that they are actually going to be able to pay it back? Because they can put anything on that document.
No, so that's where the funder is going to start interrogating it, looking at your cash flows, looking at your business model, whether it's a contract, whether it's a retail business, your assumptions, all those types of things. And they're going to interrogate that and try and verify that. That's why it's important that you show that you have a very good understanding yourself, because you can then motivate to them. So that's the one thing. The second is knowing all aspects of your business, your target market, your margins, your numbers. You'll be surprised, those basic things like your financials and your numbers. Often people say, well, I'll have to get the accountant to answer that because I don't look into those things. Very poor showing. You don't have to be an accountant, but you want to be seen to at least have a familiarity. So that's another important aspect. And then funders also want to know that you've done your research about which funders need to be approached and what the funders' criteria is. Because it's not a universal thing. The funders, like any business, specialize in something, right? So if there's a criteria mismatch or a target market mismatch by what a funder will consider, you're wasting their time and your time. So these would be the big issues that you should know.
But surely your systems, any funders, so when I say
any funder,
systems will knock that out.
Yes. Depends. Some knock it out very early, some knock it out a bit late. Does happen. So yeah.
So Armand, I hope we've answered that question. Our next question is from Evaristo Piri, And the question, Kumaran, goes something like this. Not something like this is the question. How is the funding done for SMEs and which people are eligible?
Yeah, that's a very broad question. I see this person is from Nigeria, actually.
Okay.
So I'll try and keep it universal then, given that it's not being asked by a South African based business. So each SME funder will have their own peculiarities, right? But let me just give you two big categories. The one will do small amounts of a single type of funding product that is a scorecard or algorithm based, and those will tend to be for small loan sizes. The system or the scorecard largely makes the decision, all right? And for larger amounts, you'll get funders that use what's called judgment. They will do the hard analysis, but they will use a high degree of judgmental aspect. It's not left to a machine or a scorecard. Those are things that require a lot more structuring and for larger amounts. So that's how...
Is that like a committee?
That could be a committee, yeah. At Spartan, we do that, right?
Right.
So we interview the entrepreneurs, but some people, it may be a scorecard and the computer makes most of the decision. And which people are eligible, again, depends on each SME funder. You know, at our level, we're not looking, like I said, at micros and lifestyle or startup. We're looking at a little bit slightly more established SMEs.
But just, I'm once again going to interrupt you here. You know, I see on stuff that comes through to Race Corp that you see that people apply, they see that they get knocked out, they work out very quickly that this was the knockout criteria, they reapply, they change the criteria. So people understand how to game the system, right? So when Evaristo here asks which people are eligible, surely if it's a computer system, they know how to sort of get through.
No, these computer systems and these widgets and things pick that up. So like in our systems, we can see this person inquired the initial conditional logic turned him down. 5 minutes later, they change the answers. It shows up. It's quite, it's a bit small-minded, yeah.
Okay.
If they do that.
If they do that. There's no one watching that does that, of course. Tess Gous, I think that's how you say it, has asked, in line with the recent hashtag Pay in 30 initiative, which is all about big corporates paying in 30 days, paying small businesses in 30 days, supported by a number of large businesses and their leaders, when our clients and debtors pay us late, what can we do? So what you're saying is that in light of that, but there's a whole bunch of other people that pay us late.
Yes, yes.
So what do we do?
So it's broader than just a funding question. So the first thing, those corporates that so greatly sign that pledge, that pay in 30, I doubt after making that pledge that their organizations would still pay late. But if they do, I would just suggest saying, listen, you're on this pledge, and flash that mirror in front of them, and that should sort that out. Those that are not on that pledge, there's a few things that you can do. One is Spartan's created something called overdueinvoiceregister.org.za. It's something we sponsor. You can go there and anonymously...
Say that again?
Overdue hyphen invoice
hyphen the one in the middle.
The one in the middle, yeah.
Yeah.
Overdue hyphen invoice hyphen register.org.za. And you can anonymously go and blacklist a late player. And of course, that's meant to be, you know, there's a push and a pull, right?
Yeah.
The carrot and the stick. So that's one thing.
And did they respond to that?
Some we've had, yeah. Some does happen, yes. But this is a movement. It's a new thing, you know. Right. So it's a movement. So that's one issue. But the other things about getting paid is not being shy to ask, you know, because in the leverage in the relationship, your customer is the one that is seemingly got the leverage over you. But this, I say, entrepreneurs should see it as one of peer-to-peer. They need something from you. You've provided that. You're equal in that moment, in that stream. And so you need to have the comfort and the confidence to know that, listen, that's not going to prejudice me if I request for it. Also, you have to have the right systems. If you're invoicing late, you're going to get paid late. A key thing is also about finding out your clients' payment processes and ability to navigate that, and making sure you have an internal champion that's driving your payment, your invoicing, and your collection. So these are just some of the things that are on payment.
Let's just go on a little tangent here around that, because for me this is about power, right? So there's this perceived power about the big corporate that owe you millions of rands, and you are small SME, I hate to use that term, you know that, but I'm small business here, they owe me money. I don't want to pee them off because I'm not allowed to swear. I don't want to pee them off. So I am very sweet and nice, and it goes 60, 90, 120, 180 days, and sometimes, you know, indefinitely. Yeah. And then, of course, and once you then get to a point where you don't care, you then say, like, I want, you know, you haven't paid me, and you start to become a little bit more, let's call it persuasive and aggressive. And then they say, but you didn't give a PO number. And then you have to go back and say, yeah, I've got an email exchange where you exactly said to me you're going to pay. I said, send me the invoice, I'll pay you in 30 days. And now you don't have a PO number, but you've got an email correspondence.
Yeah. So let me just, you're using a lot of P's there. Let me stick with the P's. So let me say 3 P's that are important: process, psychology, and personality. You want to make sure that the process elements are taken care of, because that's a self-inflicted wound. If you are generating your invoice late, if you don't know how the process works with your client, that's you not playing to the process in the right way. That's a first order thing. Make sure you know your stuff and put a tick on that process part. The next part is the psychology and the personality. The psychology is to understand that I've provided a service and have the self-esteem or the confidence or the respect for yourself and the respect for what you're doing to know, and that's the psychology, the voice in your head, to know that, hang on, I deserve to ask for this. There's nothing I should be afraid of. So that's the psychology part. The last part is the personality. This requires a high degree of self-awareness. This is where you need perhaps mentors or other friends could hold the mirror in front of you. And where if it's in your nature not to ask or push the boundaries, or you want to avoid conflict, then those things are going to make you only get up in 90 days as opposed to getting up and pushing in 30 days. True story, this morning, event, a guy was talking to me about the payment issues. He had a client in Botswana, owed him money. I drove or flew out there, I can't remember that part of it. Him and his partner packed a obvious big industrial lunchbox stuff. This is from South Africa, eh?
Yeah.
Went and sat there outside the CFO's office and said they're going to make a commotion. Sat there for 4 hours before the CFO came out, and then agreed, and then they paid. They made some kind of payment. Now, obviously, they followed the process. They ticked the box on that. They ticked the box on the psychology, but on the personality, they needed to have the personality to do that act. It's rather sad that you have to do that, but that's what I mean by those three P's.
Okay. Before we get other P's, let's move on to the B's. It's Bianca Blum, who is writing in and asking a question: what are the key factors entrepreneurs need to focus on when establishing a pricing model to ensure that they do not under or overprice their goods and services? So what are the key are the key factors that they have to focus on?
This is a great question, eh? Because
this is a pricing question, right?
Yeah, because it's also about strategy. And well, this question actually cuts both ways, because one, it's a business strategy question, your pricing model, but to the extent that it is flawed and you have a structural problem in it, it's poisoned from the start, and that then causes a problem for you to need funding unnecessarily needing funding, right?
Yeah.
So I think it cuts both ways. So let me answer this. A great question. There's a few things I would suggest as the key factors. The first is to consider your environment, your landscape that you're operating in. By that I mean, what are your competitors? And plot them somewhere, right? And so let's use the car manufacturers as an example. You're going to put the supercars, you'll put the German stuff, the BMWs and Mercedes and Audis, and then you're going to put the other more economical ones. You're going to plot those things out on some kind of matrix, do the equivalent in your business. So understand the landscape, because if you don't, then you may be the BMW trying to drop your price to compete with the Toyota, because you don't know your place in that world. So that's the first thing, understand your place in that world. Number two, understand what is or should you be focusing on from a target market segment point of view. the people, the manufacturer, that's the German brands, luxury brands, have chosen a particular target market and segment, and they're clear about that. Those that is like Toyota, the Japanese ones, have chosen a particular target market, and they're clear about that. So competitive landscape on the one side, and then your target market. And then the third thing is determining what are the key aspects that is unique about your business. Call it USP, or the things that you're damn hot at, right? Compared to those competitors. So you're saying, this is my place in the competitive landscape. These are the target markets I'm focusing on. And thirdly, this is what I'm awesome at in relation to that target market. So now you're valuing your worth, not from a psychology point of view, you're valuing it from in that context. You're in the right perspective. And then, almost like as a paradox, I would do some kind of a cost-based analysis. Like, this is what it costs me to produce this thing. This is what it costs me to deliver the service. And this is what it should be a decent markup, you know, for my break even and all those things. So you got those two, and then you find a way to reconcile what the right level is. And that's where your strategy comes in, right? To say, okay, well, I'm so confident about my niche and what I'm doing that's so unique, I'm going to price it at that level. If you don't have that, then you're going by guesswork. You have an insecurity about your pricing, perhaps, or you're going to say, well, I've got a commodity and he's cheaper, let me go 10% than him.
Yeah.
That's not, so this perspective gives you the confidence. And when you don't have that perspective in the things I'm talking about, then you don't have the confidence. Now you've got a pinky in the brain kind of insecurity driving your pricing model. This is what I would suggest.
Can I come in there just to give my perspective to Bianca Bloom as well? You know, from my perspective, it's I agree everything, which is very seldom that I agree with Kumaran, but tonight I agree with him. But I want to give also a slightly different perspective, which is the fact that what I see often is that people do that, my competitor does X and I do 10% less. They don't know their base cost. And then they argue back to say, well, I can't compete with the big guys. They've got economies of scale and I don't have that. And so I can't compete on that. And I go back to them and I say, well, if you cannot compete on price, you've got to compete on something else.
Yes.
Right. Which is, to me, is a unique selling proposition. What makes you different, special. And what's more important than what makes you unique or special is that you can communicate it and prove it.
For the audience, that's the quick
audience.
caveat.
Yes.
You've got to choose which audience. What's good in one audience is not suitable in another one.
100%. Yeah. So what I think really what I'm trying to add to what you're saying is that sometimes you don't have to compete on price. You can compete on something else. And the most logical thing always to compete on is value for a particular market.
Yeah. And I just remembering one more thing here is to have the discipline to walk away from a client that's not in your... So what that looks like, it's BMW or Mercedes or Audi or Volvo having the discipline to walk away when someone's got the budget as a lower kind of brand, but equally great, and they say, well, you know, your Audi should be the price of this brand. And then the person, and then you don't drop that. You say, listen, go to the next showroom. So it's the discipline once you have that perspective is very important.
Yeah.
And that requires a level of
self-confidence.
Self-confidence.
Yeah. Informed
Informed by the perspective, yeah. So we got a question.
Right, yeah, so Kumaran, now we've got something different here. See what's come through here is we've got a video. We've got a video from Tracy. So she hasn't sent through a question, but a video question. So could we play that, please?
Hi, my name is Tracy. I am the owner and the founder of a fairly new business. We produce and sell baby and toddler products. I have a question for you. What are the basic minimum documents that are required, or that I require, to apply for finance from a funder? And the second part to that question is, how important are financial statements? Like, what if I don't have them ready? How important are they to apply for finance? Thank you.
Okay, so what I see Tracy asking here is, if I've just written down here, is what basic minimum documents do I need to apply finance to any funder? So what are the basic documents that I need to give a funder, and how important are financial statements?
Okay.
And what happens if I don't have them already? And that's a big thing that many people who are applying for finance, normally it's a lastminute.com, they haven't had their financials in order, and then they come to somebody like you.
Yeah, let me give you a practical suggestion. If you don't have the financials, maybe go to your nearest casino and or buy a lotto ticket, and because it's a ticket to the game.
Yeah.
And you might as well go and depend on luck or whatever, right? Because what is it saying to any? There may be some funders that will, make a decision on your credit card sales, and machine and things like that. But that's going to be funders focusing on smaller amounts with a particular niche. The vast majority are going to need financials. It also shows that you know what's happening in your business. It's a sign. It gives them confidence. Hang on, this person knows what's going on. They are credible. They can defend their numbers. They can analyze their numbers. How do you manage a business? How do you drive a car without that? So the financials for me are non-negotiable, and it's.
But who has to do those?
So those.
I mean, do I need a fancy, big accounting firm?
So doing the financials can be done by
my
depending.
mother-in-law, who did well in accounting in grade 10.
I think stay away from your mother-in-law, including the cooking and everything.
Yeah.
But on the financials part, it depends on your life cycle or your stage of your business, right? So it can range all the way from someone doing it themselves, not a good idea, having an internal accountant, having an external accountant, cloud-based, non-cloud-based, hiring. And as you grow, this is a kind of a scale issue as well. As you grow, you will outgrow these things. Maybe initially you will have it done once in a while, then you'll move to have it done every month, then you'll move to have it insourced. Whichever way works from an economics and what's practical for the stage of your business, I'll leave it up to the audience to figure that out, you know what I mean? But the important thing is to say that you need to have financials being done regularly. So that's the one thing that's needed as a basic set to the funders. The other is things, and what accompanies that will be things like your debtor's age, your creditor's age, and depending on the amount you want and the type of funding, also the cash flow forecast.
But I'm just going back to somebody who says, I need money, and have you had that where they don't come with any financials or?
Yeah, our website kicks them out straight away, and most funders will.
And how do you know those financials are true?
So there's, we're not going to give away our secrets, but different funders have ways of triangulating that, right? And you'll be surprised how often they either dodge to start off with, or they rustled up over the weekend sometimes, and it shows, right? It does. Yeah. It does show, and so funders can pick that up. Again, you're doing yourself a disservice.
I see a lot of entrepreneurs who apply to Race Corp, and we get, I don't know if as many or less or more. Let's not compete. We get about 50 to 100 applications a day. And when you look at the financials, and by the way, financials are not important to us because we don't fund, but we see there that they live out of their businesses. So the rent, all the naughties that small businesses do, right? The rent, a couple of the household costs are all embedded with different names into the financials. What do you feel about that when somebody's coming for funding, but they're living out of their business?
It's quite a common thing where the lines are blurred in the early stages, between self and business. It does happen. It's not excusable, but it's understandable. And what you want to see is them maturing and behaviorally changing out of that. I think, it's in the early stage, you can exercise some empathy and understanding that. But as you're growing, it's a sign of poor discipline, and it doesn't give a comfort to any kind of funder.
So are you saying, putting you on the spot here, are you saying that if it was very clear that somebody was living out of their business in the income statement, that you wouldn't fund them?
Yes.
You wouldn't?
Yeah, because it's indicative of probably a business that's too small for us to fund. Our minimum funding is R1 million and above. So generally that type of business would...
The funding requirement or the revenue?
The funding, the loan is a minimum $1 million what we do.
So typically would a business have to be, what size would it have to be? 10 million revenue?
Yeah, 5-10 million. But you know, you would get someone that is maybe 3 million turnover. They graduated from an incubator. They've got a contract or a project or something, and then you know they're going to jump past that 5 and 10. Then we exercise some, you know, discernment about that, because we're looking to back a growth entrepreneur for a growth story. That's the thing. That's the most important thing.
Just a quick aside, why is that important, a growth story?
Because we want to know that their focus is in the right area.
Yeah.
A lifestyle business, we can't, it's hard to us to get comfort about how we're going to get repaid. We also know that a large part of our clients, and I would assume this for a lot of funders, is repeat business with the same type of client.
Who are moving to the next level.
Next level, you know, and you want that. Someone focused with their eye to the future like that, you know, is going to want to hire better people, improve processes, improve systems, and make themselves and the business and the people around them a bit better. And that de-risks you.
All right, let's move on to our next question, which is actually also different. We've got all sorts of things. We've had people write in, we've had people send video, and now we've got an audio from a gentleman called, he just called himself Simon.
No, I think there's one from Ian McCloy.
Okay.
Is that right?
Okay. Sorry, we've got here. So we've got Bongani Kumalo.
No, Ian McCloy. Oh man, look.
I've got here Bongani Kumalo.
Look, two ups.
Yeah.
It's Ian McCloy. Yeah.
Okay. So which one?
Ian.
I'm asking our producer, Ian. Okay.
Ian, check that.
Ian. All right. So yeah, he's taking me. I can't believe you're right. Yeah. So it's Ian, right? So Ian says here, how to get that first 50,000 to get a business going? No collateral, few assets, no rich uncle.
Yeah, that's probably a question.
How to get that first 50,000 to get a business going? No collateral, few assets, no rich uncle.
Yeah. There's many an entrepreneur. That has started off their business with no bank or institutional funding. So, and there's lots of tricks that they've done. It's depending on the person. It's depending on the kind of thing you're selling and what they're doing. Some people have been tenacious enough to ask the customer for a deposit that covers their cost. Some people have been tenacious enough to ask the supply and convince the suppliers through begging, through persuasion, to selling their kind of credibility and confidence to give them terms. Some people have convinced, you know, the parents to let, okay, there's no rich uncle, so assume there's no family.
But there's other family, right?
It's not, there's other family, but there could be friends.
But he's talking about here about rich uncle. But it doesn't have to be. 50,000 is 10, 10, 20, 10.
Yeah. But you know, you'd be surprised. My calculation is a vast majority of startup businesses. It's impossible to get funding from an institution, any type of funder, for an idea or startup.
Where did you get your initial funding from?
From sales.
From
sales, and then negotiating with suppliers. It's just because you have to manufacture liquidity. It's a funny thing. It's like a artistic, creative stuff. Because when you have very little resources, I'm not going to swear here, but what happened? The sphincter tightens, right? And then it engages the brain, doesn't it? To think, okay, I'm in a corner. How do I try and figure out legitimately what to do this? And then all kinds of your personality kicks in, psychology kicks in, and these things happen. And so if that hasn't happened yet...
So how did you get funding then?
So, you know, unfortunately, I can't give a check. You know, how did you start? It's not a checkbox around how to get that first 50. You know, it's but there's lots of entrepreneurs.
Credit cards.
Okay, that's a good one.
Credit cards.
Right.
To be honest, I know this is, but I used one credit card to pay another. I found out that was illegal. It's called card flying, but I was doing that. And then 5 friends, and I was borrowing from one and giving to the other. And I was, and that
lucky
was
I didn't know you at that time,
lucky.
Yeah.
There was a mixture between credit cards and friends, and that's how I funded my
Some
business.
things I've suggested to people as well, if you've got a car and it's either freehold or you're owing a small balance, think nothing of selling it, even at a discounted amount. Take whatever equity is in there, you know, and public transport or Uber or friends things, or then lease the next car. You got to really, you know, you talked about credit cards. This is really MacGyvering. I love that word. at that level, because there's no rule books on this. There's really no rule books at that early stage. There's no checklist on that early. I know I'm not answering the question properly, but I'm just trying to give a sense of some anecdotes or stories how to do that.
For those of you who don't know what MacGyvering is, there was a TV show about 100 years ago when Kumaran was about 40, and it was about a guy called MacGyver who got himself out of all sorts of corners very creatively. So that's what he means by MacGyvering.
Yes, okay.
All right, so now we've got now my one. See, now the producers come here, send me through one here. Bongani Kumalo has asked, how can my company as a SMME, I hate that term by the way, as a small business, get purchase order funding?
Well, there are few. Purchase order funding is a particular type of funding. You'll be surprised as how common that need is. There are few funders that focus on purchase order funding. A Google search will pick that up. Spartan is one of those funders, but not the only one.
Yeah.
So
what is it?
What it is that you've got a purchase order
from a
company or government,
yeah,
and now you need capital to deliver on that purchase order. Could be for product, it could be for a service, it could be for a implemented solution, right? Now you need, what are the things you would need money for in order to deliver that purchase order? Because that's a commitment from that corporate or government. And then you're going to be able to deliver on it and invoice them and then wait 7 days, 30 days, 60 days to get paid. So funding typically needed for this purchase order is at the start to kickstart the purchase order. Second part is then to wait for payment. Let's focus on the first part. It could be you're too small, the suppliers won't give you a credit line. They're saying, put the cash down, then we'll supply. So that could be one need. Two, you need to pay your labor in order to do something with those equipments or services to be able to finish the job. So that could be a second thing, right? Typically those two. And then you've done the work. So, and then let's say that takes you a week or 30 days, you've done the work. And so you need to pay for that. Then you do the invoice and then you wait 30 or 60. Then that also needs, because you've got other expenses. So that's typically what the purchase order will trigger, and that's what you need funding for. So
just from a funder's point of view, there are two risks that I understand. Number one is that you will deliver.
Yes.
And number two, that you will be paid by that corporate or government.
That's the two big ones. So the first one we call performance or implementation risk. If you've never done this thing and you don't have a technical competence for this purchase order, that's not going to inspire it's like if you've got a complicated thing to deliver or it's the first time, it's a large one, it's like, hang on, how sure are we as a funder or any funder that you're not going to mess that delivery or the implementation up? So most purchase order funders will not get involved in funding anything that requires a labor implementation part. It's just picking up this thing and delivering it from A to B. They will do purchase order funding for that. We do get involved in the other part, which means you have to do something with the equipment or the materials, but that's high risk, and we do fund that. But you must know now you need to have a high degree of confidence in the performance or ability of the entrepreneur.
And you would get that confidence through going to see that they've done it before.
If they've done it before, what their track record is, okay, I'm only 1 year in business, but what were you doing before? Well, I was employed in the same sector. I've got my studies in that, and so it's like, okay, you'll take that into account. You may be 1 year in business, but you've done that in your previous life. So that all goes to performance, right? And you're not jumping for something like bigger than you can chew. You're starting with whatever is equivalent to your steps.
But entrepreneurs do that.
Yeah, it's okay, but it's all about a measured assessment, right?
We do that,
yeah.
Right?
And the second thing, which is an important thing you mentioned,
you're diverting. You're moving on. So what happens if they bite off more than they can chew? Before you go into part two, so I'm used to delivering on 5 million. I've got a 10 million rand order.
You're talking about them biting or the funder's interpretation of that?
Yeah, them biting. So
yeah.
I normally do 10 million, 5 million. I get an order for 10 million. I believe I can do it. I've never done it before. How do you fund me?
So we will look if there's not much complexity in the performance or the delivery. If it is buying A from this supplier and delivering it to the client, whether it's 5 or 10, if it was previous, it's the same kind of, there's not much in there. But let's assume it's a software development or it's a construction project. And then you got to look, is it a different thing in nature? The degrees of complexity, the variability involved in delivering on that purchase order. A funder can determine that. They'll interview you, and if you're umming and ahhing and don't know your stuff, well, then that would be a problem. Can I move? No, I'm not. Right. Now, so let me move on to the part about the payment, right? The purchase order. Very important. People think, okay, I got a purchase order. This is great. Let me go and it means I'm going to get funded. But we have a saying at Spartan, is the purchase order from an Alice? Remember that song? It was rock band.
Alice.
Is Alice, right? Okay. So what that means, the purchase order needs to be from a counterparty of substance, not Mickey Mouse and Alice and Donald Duck. So that means, whether if it's government, great, but is the department or the province or the municipality got a good or a bad reputation? That's one hand. If it's a corporate, they could also have a bad reputation, or is a no-name kind of brand, right? So the counterparty is very important. SMEs or entrepreneurs, I'd urge you to focus. It's not that you have a purchase order. And then what are the legalities around that? Is there a contract that companies, what are those breaches and terms and all those types of things? And what are the payment terms for them? Yeah.
Okay, we've got another question here. Hopefully I get this right here. Yeah. I've got the right order here. Leon Root, how do you fund technology businesses that have longer, and in brackets, 1 year or so, cash return time? Once the product is complete, go to market, scaling funding is not easy to do without assets to provide surety. Do you want me to read that again, or
for the audience? I got it, but you may want.
I got it. Come through on yours as well, right? Yes. So, how do you fund technology businesses that have a longer, that's 1 year or so, cash return time? So, okay, so it's more than a year to get your money back. Once the product is complete, go to market. Scaling funding is not easy to do without assets to provide surety. So, what I'm understanding from Leon's question is that I've got a longer than 1 year return time on the, I would say, the investment. So how do you get funding without providing those assets?
So the clue is also, in my view, in the second part of what was said, that is, once the product is complete, go to market, scale funding is not easy. So this sounds to me something that is an R&D or is in development or has got a long sales cycle, right? That seems to me from the question is what I'd infer. And with that requires patient capital, it requires forgiving capital. That leans towards either family, friends, one category. It leans towards what's called angel investors, next category, one level up. This could be, wealthy people that's got some spare money and wants to play around with it, not risk it or gamble it, likes an exciting opportunity. You can't find them so formally. Sometimes they exist in angel investor platforms, but it's more about your ecosystem, your network, and your network's network. And the third would then be, venture capitalists, if it's a technology type of thing. So this is leaning not towards debt funding, because a debt funder, there's a slide we've got on what a debt funder looks for and what an equity funder, maybe we'll call that up now or a bit later, but a debt funder is looking for immediate serviceability. I'm lending you this money, from the next month we want to see the repayment, or some kind of predetermined certain repayment comfort. Whereas an equity funder won't put pressure on that and is prepared, but is looking for a return. They're prepared to wait to be forgiving, but they want a high return. So those three categories will be family and friends initially, maybe angel investors, and then you would get the seed investors on VC, and then the rest of the VC. So there's a kind of a structured approach how to approach this type of thing. So that's what I would say. It's not going to be easy, but that's what I suggest.
So we moved now from basically loan funding to equity funding.
Because this is a universal discussion.
Yeah. So for me, I'm very pro equity funding, because I do that, and you do loan funding, so we sort of, and you do the other one. I know you do the other one on the side. But just quickly, the advantages of both, because people, I've heard you say that equity funding is expensive. I'm giving away a piece of my business. My view is that you'd rather give a piece of the business and come with what I call smart money, which is, you get not only the money, but you get the access to market, you get the grey hair, you get the maybe some technology or support that allows you to take a business that you might have taken 10x to 100x or whatever the case may be. So your perspective as a predominantly Spartan SME Finance is a debt funding platform?
Around that patient capital.
No, debt versus equity.
There's a horse for a course, first of all. So again, it starts, one of the listeners asked a question earlier on about when to approach or the different type of funding. So it's about what to show that you have a very good understanding on. Remember I said it's about knowing your funding need and what you require. So to know your need intimately and how you want it to be repaid or how you can afford it will inform whether you're going debt or equity. And if it's equity, as I said, it's family and friends, angel, seed, and then VC, if it's an innovative type of business. Or if your need can be repaid or serviced through debt, then is to investigate what type of debt funders. So this comes from that initial genesis of knowing what you want the funding for and how you think it can be repaid. That will give you a clue about which way you're going, which is equity and the type of business as well versus debt. So it's
okay. Well, we've got our next question here, which is from Rowan, and he asks, why do most, I can't stand this term, SMEs, why do most small businesses, Rowan, I'm going to change that. No, I don't like SMEs. Okay, small businesses, finance applications get declined by a funder. Why are you so horrible, Kumaran? I think that's...
I'm horrible to you. But not to anyone else, just
so
to be clear.
Why do they get most of them?
Well, so let me say, I'm going to answer it universally across all funders, right? So the typical things, the common things, because this is an exhaustive list, but let me just keep it at the common high level. The one is, you'd be surprised, is that the SME or the small business does not have all its information ready. It's like arriving at the airport and say, I want to go to Durban on the 8 o'clock flight. Okay, where's your ticket? No, I don't have it. Where's your ID book? No, I don't have it. So you'd be surprised how many people apply for funding without having all those things ready.
Yeah.
So the basics 101. So that's one common reason. The second would be serviceability or to show repayment. So that's for a loan funding. For an equity funding is to show them a return.
Right.
So the one is repayment ability or serviceability for a debt fund for loan, and for equity is a return. So if you can't demonstrate that, no one's going to have the comfort to lend you or invest. The third one could be that your business model is structurally flawed. It's just crap. It can happen. It's happened in our businesses. We have to tinker and figure stuff out. It's not all businesses go through this. It could be also you've got some dark cloud around you or your business, and you haven't sought to explain that in advance to give the comfort to the funder. It could be you had a blemish against your name, not the end of the world, not criminal, but to be able to explain, this is what happened, this is what I did about it, or this is what I'm doing about it. Certain things you can't explain away, but at least to do that. So these would be the common reasons why things are declined.
Okay. Here we got from Vusi. Would it be possible to finance RFQ business? Request for
purchase
quotation. RFQ is request for quotation. So RFQ purchase orders, and I don't know. So RFQ purchase orders and have the funds disbursements in a maximum of 24 hours. So I've got a...
Okay, so two-part. Yeah, so it's a two-part. Let's figure. I understand that. Let's forget about the RFQ part.
Yeah.
So the question is it possible to get purchase order funding?
Yes.
And get the money in 24 hours. Let's break that up, right?
Okay, right.
So possible to get purchase order funding. I answered that a few minutes ago.
Yeah.
About purchase order funding, right? Getting it in 24 hours. The answer is no, because that's impossible. Because and why would it be in 24 hours? It's probably because it's unlikely to be because a legitimate client or government department gave you this purchase order at the last minute and said deliver on it, immediately. It's not impossible, that's unlikely.
Yeah.
What's likely is that, perhaps you've been struggling, shopping around, struggling to get the funding, and now you've run out of time. And I empathize with that. It's a real situation. But 24 hours, no one can legitimately assess something and disperse the funds. we can turn around stuff in 3, 5, 10 days, but even that is not 24 hours, and most purchase order funders at least needs a couple of days, because there's a certain basic level of assessment and analysis and review that's needed on verification and putting those approvals in place. So I think that's an unrealistic expectation. But on purchase order funding, I've answered that.
Okay, Vusi, I hope that answers your question here. Right, next question here is from Sarah. Her question is, what funding options are there for small and medium businesses? Finally, somebody has not used the term SMEs. What funding options are there for small and medium business enterprises like mine who do not meet the 500,000 annual turnover threshold that most funding entities seem to peg their funding benchmarks on?
Yeah.
So she's actually a small business, not a medium business.
Yeah, it's a fair question that many businesses at that phase will have. Let's look at why most funders that concentrate on even the small startup micro businesses, which all businesses grow from there, why would they focus on? A lot of times it's about an NCR type of regulatory issue, or it's about them wanting to fund a business that shows some traction, some legitimate reason to exist, some kind of affirmation that there's a market. So that's why there's that kind of minimum level. So it's really any kind of alternative funder or a traditional funder is going to struggle to fund your business if you're doing below 500,000 rand. It's near impossible.
So that's
now
your 3 Fs then, your friends, fools and family.
That's the one. It relates to the other question the guy asked, I think it was Ian McCloy, about the 50,000. So it's family and friends. If you don't have those, try and convince the customer to pay you in advance, a big deposit. Try and get you got to manufacture liquidity. It's a very this is an entrepreneurial game. It's an entrepreneurial notion to manufacture magic. It seems impossible, but when we look at the inspirational stories of all these other entrepreneurs that make it onto the media stuff that you can look at, they all have a story about how they started something, whether it's McDonald's and Ray Kroc and all these stuff. You get what I'm saying. So it requires a creativity.
She's doing 40,000 odd a month. I'm just using it as a round number. She's doing 40,000 rand. She's probably got 1 employee, and now it's month end, and she needs funding, right? So what?
Alternative funders. I can tell you what someone needs to hear, not what they'd like to hear.
Okay. So they'd like to hear you'd fund them. I know that.
Or any other funder would do it.
So where do they go to? There's guys that specialize in 10,000 rand funding and 50,000 rand funding.
Yeah. So okay. Let me be solution focused. So what you do is you'd move outside of the business funding to the personal funding side. You talked about credit cards.
Yeah.
There's a whole lot of personal loan institutions that will give you a micro loan in your personal name.
Yes.
And a lot of entrepreneurs do that, especially in COVID when they couldn't get what they were doing. We've seen entrepreneurs, even at a decent size, have taken 3 or 4 personal loans and put that into the business. So there's a range of legitimate institutions, banks and whatever, that will give you, personal loans. And, okay, it's not viable, but, you'll take 2 or 3 of those at 150,000 rand each. Voila, you've got 450. It's not as easy as that, but you must be prepared to do anything. As long as it's on the table above board, you must be prepared to do anything.
Okay.
Sell that car. Sell that annoying 5-year-old,
Here's another question here. It's from Anonymous. How does an entrepreneur cope with rejection from a funder? So when you give them the middle finger, so how do they cope with that?
I don't know how people cope with it. I admire those that do. I would say that the entrepreneurial spirit is one forged in adversity. That's my sense. And I speak as an entrepreneur myself, right? Funding entrepreneurs. And number 2, it's forged in adversity. It's forged in rejection. It's the ability to go from rejection to rejection, failure to failure, still get up in the morning, put on a smile if it's fake or not, and buck up and move. So that's one component is a spirit answer, right? A spiritual kind of philosophical, psychological answer. Then let me give you a technical, practical aspect, is to be a bit removed from the experience once you've, dealt with the emotions of it, and perhaps go down to those funders and ask, listen, why was I rejected? Learn from the experience.
Yeah.
So I was rejected. Tell me and say, listen, I understand why I was rejected. Tell me something that I can walk away from the experience to learn. And so, and do that from 2 or 3. Don't rush to the next funder. Learn, refactor, implement some of those things. Now you're practically implementing learning from the experience after dealing with the emotion aspect of it. No?
Yeah, sure. But we've all got rejected, and there's an anger in that. So you have to move through the anger, right?
Concede.
Concede.
Transition.
All right.
I'm not talking about politics.
All right, and then move on to the next one. And we hear obviously the stories about 1,000 rejections, etc., etc. But sometimes it's also about that you're pitching it at the wrong level. In other words, you should be asking for 500,000 and not 50,000, or 1 million. That you're not thinking big enough.
No,
have you not heard? I've heard that plenty of people.
Yeah, I mean, those people like to make sexy stories about those things. I think if you have a legitimate need that can justify this amount, to go and put another 0 on it, you're going to damage your credibility.
Yeah.
Those are maybe a story for a moment in a movie, and maybe they do exist in some parts. You add another 0, but for the vast majority of debt funding, you have to justify the need for this thing, right?
Yeah. We've got 3 minutes left, Kumaran. I just maybe want to use the last couple of minutes here to sum up what
that looks like an important question, though.
We've got another one. Okay. You want to sneak one more in?
I'll try and keep it to a minute.
All right.
Yeah?
So we've got now 2 minutes left. So you got 1 minute because I need 1 minute to
Go.
What's the difference between collateral versus surety, and why do funders require it?
Collateral is you pledging something down, tangible or intangible. It could be property, it could be gold coins, it could be a policy, an investment, it could be a debtor's book. Those are things that a funder can say, if it doesn't work out, if things have gone awry, then I've got something to hold on to take and liquidate, sell it at auction or whatever and get the money back. That's what collateral is. There's various grades of it, prime to subprime, not so great collateral, but that's what that is. Surety is a document that says that no matter what goes wrong, you can come after me and I will make good at it. Now, you may not have much to make good at it, and this is where entrepreneurs, the part they battle with is that it's a psychological testament. That's what surety is. It's saying, listen, I have faith in this thing. I may not have much, but if something goes wrong, come after me for what lot or little that I have. That's the difference between the surety. Yeah. Okay. What's your 1 minute?
No. It's what's called about coming after me. Our producer is coming after us, saying 1 minute. We're probably over it. So Kumaran Padiachi is CEO of Spartan SME Finance. Thank you so much for great insights. It's been 8 years we've been working together on TV, and now in this format. We've been in EO together for Entrepreneurs Organization for 14, 15 years ago. One of my mentors in my life, and a great, I'd say intellect. I wouldn't say that to his face, but I'll say it to you.
See, he doesn't compliment me in person, only when we're in this kind of forum, but thanks.
A great intellect and somebody who's very practically been through this and now is funding small businesses. So if you didn't learn anything about funding today, at least you learned who MacGyver was and who Alice might be, that everyone is trying to find out who Alice is. This is the first of our live Q&A strategy and funding for SME series, brought to you by Spartan SME Finance. Do stay connected with LinkedIn on the Spartan website and their LinkedIn page and Facebook page and all the other YouTube channel, just to see when the next live Q&A is. That's it. That's a wrap, as they say. And thank you for watching and hoping that you got something out of today. Thanks, Kumaran.
Thanks.